Governor of the Bank of Jamaica, Richard Byles, says the Jamaican economy is expected to grow between 1 to 3% in 2025, while noting the battering dealt to the various sectors by hurricanes and natural disasters in 2024. This as he shares projections for the inflation rate and possible risks given international factors. More in this report. With the central bank sharing that inflation and core inflation have been within range while highlighting possible factors influencing these movements, Governor Richard Byles notes there are some positives, even if the projected growth for 2024 has been met with contractions.
Let me highlight the positive development of inflation being lowered firmly within the target range of 4 to 6%, with the expectation that Jamaicans will benefit from a stable and predictable rate of price increases over the next 2 years. Secondly, I also want to reaffirm Bank of Jamaica's commitment to achieving its primary mandate of price stability by maintaining inflation in the 4 to 6% corridor. And thirdly, foreign exchange market stability is a significant contributor to price stability, and the bank is equally committed to maintaining stability in the foreign exchange market.
Notwithstanding this, the governor shared likely risks to the inflation rate beyond, in some cases, the control of the local market. Factors which would seemingly include how our trade partners up north respond in coming months when a new president takes the reins.
Inflation is projected to broadly remain within the bank's target range over the next 2 years. The current outlook for inflation is lower than the previous forecast that was shared with you in August 2024. This downward revision mainly reflects lower transport-related and processed food price inflation. However, the balance of risks to the inflation forecasts are skewed to the upside, which means that inflation is likely to be above the forecast. There is increased uncertainty related to potential economic policy changes among Jamaica's main trading partners, which could have adverse implications for investment and remittance inflows, as well as inflation expectations.
That's in relation to Jamaica. He also notes higher inflation could result from continued uprisings beyond local shores.
Higher inflation could also result from further escalation in geopolitical tensions, which could adversely impact international supply chains. Worse than expected weather conditions in Jamaica could also influence higher inflation. While information suggests that private sector wage increases have stabilized at their pre-COVID rate, there have been emerging reports of labor market pressures in particular sectors.
Meanwhile, those risks aside, the BOJ boss reasons overall things are expected to improve for the country come 2025.
The bank projects that the change in real economic activity will fall in the range of -1% to positive 0.5%, while real GDP for the financial year 25-26 is projected to grow by between 1 and 3%. The projection for 24-25 largely reflects the anticipated adverse impact of Hurricane Beryl on the economy and is underpinned by contractions for agriculture, forestry and fishing, and construction in particular. The outlook for financial year 25-26 reflects the view that there will be a fairly rapid rebound in economic activity following the declines of financial years 24.